Good morning. It's June 2nd, 2023. This is Rob Sin at CEO Technician on Twitter, at Goldfinger on co.ca. And I want to do a video today about risk management and also comment a little bit on my presentation from the Metals Investor Forum from last weekend. So, if you enjoy this video, if you like the content I produce on YouTube, please hit the like and subscribe buttons. I would appreciate it. I'm putting out videos almost on a weekly basis lately, totally free content, hoping to share knowledge and market insights completely free. So, last year, I wrote a blog post, as you can see right in front of the screen, a dozen rules of risk management for staying in the game in any market climate. So this was early May 2022. Market was getting a lot more dangerous and more volatile at this time, and I felt this was a timely topic to discuss the market, the pandemic market environment from, let's say, April 2020 until early 2022 was an environment that was characterized by excessive risk taking, investors embracing risk in unprecedented ways and unprecedented size. And that's something that I talked about a bit in this blog post. A lot of it was from the Bitcoin rise from under $1,000 to over $60,000 in a few years. Obviously, there were a lot of meme stocks that had incredible moves, and people just became incredibly overconfident. This concept of hodling, basically never selling, always holding, came about, and it's just a crazy way of embracing risk and a great way to lose huge amounts of money. I feel like a lot of investors, market participants, became incredibly overconfident in 2021 and 2022, and many of them have paid a very dear price for that overconfidence in the last year. Um, One of the things that I think is really important and not discussed very much is risk management and position sizing. In this blog post, I talk a lot about that. One thing that I think could support a lot of newer traders, newer investors, is this one right here. Putting your downside risk and the potential for loss first in your thinking. Once we get clear on the downside risk and embrace the potential that we will lose money, the upside profit potential often takes care of itself. So before one presses the buy button, before you put a trade on or put on a new investment holding, we need to really sit there and ask ourselves, how much am I willing to lose here? Am I really willing to risk that much? Where is my out? Where is my stop loss? Where am I wrong on this investment or trade thesis? And unless we're clear on the answers to those questions, there's no point in getting involved, because once we get involved in something where the price is constantly changing, the market's constantly in flux, and we could lose money if we're not clear on how much we're willing to lose, then the losses could be 100%. And a lot of market participants seem to think that averaging down endlessly is a strategy. Well, I'm here to tell you that's a strategy for losing your shirt. And it's a strategy that shows a lot of hubris. At the end of the day, the market is usually right. So trends tend to continue trending. Downtrends tend to keep trending down, and losses can become very large unless we manage them. Unless we say, "That's it, I'm out. It's exceeded my risk tolerance." Right. So getting clear on risk tolerance and where you're wrong and being willing to admit, I got this one wrong. It's part of the game. The market is tough and we're not always going to get it right. Okay. We're going to make losing trades and losing investments. And it's about managing the downside that will keep us in the game long term. And this is a great quote from Peter Bernstein. Survival in the end is where the winners are by definition, and survival begins with humility. So any great market participant, you talk to experienced people in financial markets, experienced traders and investors, and almost to a man, they are humble, and they're often starting sentences with, hey, I get it wrong a lot, but, and, or they say, here's my thesis, and, I'm totally willing to be wrong on this, and very often with novices, it's unbridled hubris and incredible overconfidence in their trade thesis and the way they think they have it. And that's just not the way to do it. Markets are tough and we're going to get it wrong a lot. In my presentation from last weekend, I talked about cold stocks, and this quote really stands out as important. It ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so. That's a Mark Twain quote, and that is so apropos for investing, and especially in the junior mining sector. Um, it ain't what you don't know that gets you into trouble. It's being overconfident in what you think you know that's actually just not true, right? We see this all the time. Confirmation bias is abundant in cold stocks. Basically, people just want to hear how right they are and actually not really testing their thesis, and finding ways that maybe things aren't quite as they appear to be on the surface, right? And obviously, chasing popular stocks with really high valuations is the number one way to generate big losses in junior mining, because for every high flyer that becomes a great bear, 50 cents to $29 in 4 years, there's at least a handful, maybe a dozen, that make the full round trip, right? They go from 50 cents to whatever, $5 or $10, and then all the way back down to 50 cents or maybe even lower, right? There's so many stories like that. Mining is cyclical. Mining and metals are cyclical. They go with long-term cycles of the economy. And if you stick around long enough, you'll go on quite a roller coaster ride in many of these stocks and in this sector. And every year, we get at least 2 to 3 cold stocks in the junior mining sector. And really, I don't need to point them out to you. Cold stocks are like porn. You'll know them when you see them. So, risk management first. Focus on downside and how much tolerance you have for losses before you press the buy button. Less ego, more humility, better results. Thanks a lot for your time and attention. And again, if you found some value in this video, please hit the like button and subscribe to my channel. Thanks a lot.